Welcome back. ICT Trading Concept. The first thing is you have to confirm me that you guys can hear me or not. Okay, don't forget that. Just let me know you can hear me or not. Just comment it below because I'm just trying. Okay, thanks, Hans. Just let's try. I mean, you can hear me or not. Just write it down. The voice clear, sound good. We can hear. Okay, so I'm good to go. Thanks God. Thanks a lot. Thanks. I was really I was wanting to talk about today's price action. It was very precise and very clear. So I really wanted to talk about this price action. Thanks Allah to make everything okay. Okay. So here is the 15-minute chart. I really do not want to spend my time over here. I would like to go to 1-minute chart. But before going further, I want to actually reply one of my buddy's question. I don't want to tell his name, but if he wants, he can write it down that this was his question. Okay, he told me that why I don't take a Perform account and I don't trade over there. So this was his question. The thing is, brother, the answer is I have already two account, one in FTMO, one in Top Step. So if you go to my YouTube channel, you will see the execution in my Top Step account as well. So, and the last video I told that I'm just gonna stop uploading video about my real money. I did that before because I knew this type of question I will face. That was the thinking. So that's why I put two to three videos maybe for executing live execution. Then I quit. Okay, and now from the beginning of October, I mean from the 1st of October, I have started the live streaming, and so far I remember I have just missed maybe 2 to 3 days last month, and every single day I was spending my time over here, the whole session. In the meantime, last month I took 3 trade. I repeated this so many times, but it is what it is. Okay, if I want to trade to my live account, I will do it by myself. Okay, I can't trade in front of all of you guys because it distracts me. That is a problem. So I think you got your answer, and if you want you can write it down that it was your question. Okay, if you want, I didn't tell your name, so don't misunderstand me. I mean, don't misunderstood understood. Okay, so whatever. Let me go to the 1 hour chart first. So this is the 1 hour chart. If you remember, this is the hourly fair value gap, and I told you if this fair value gap can hold the price, then I will expect some kind of lower manipulation, and then Wednesday and Thursday I will expect higher expansion. Okay, that means I was expecting market will go and take this high, and it will never go above that high. That was my expectation. But if price would really, if it wants, then it can go above that high. There is daily fair value gap and the order block, so it can go over there. Okay, now I will talk about this fair value gap. Anybody has any confusion about the last fair value gap of this run? This is the run. Okay, just let me show you. So the run has started from here, and it was just going lower. Okay, it was going lower. When price came here, this was the last fair value gap from hourly chart. If I go to 15-minute chart, I will get two more fair value gap over there. I showed it to you in Sunday, so far I remember. The first fair value gap. Okay, let me go to the 15-minute chart. Let me show you that one. So this is the 15-minute chart, and if you see, okay, so there is one over here, very small fair value gap, and one is over there. I mean the 15-minute from 15-minute chart. Okay, so I will just mark the 15-minute fair value gap. Here is the 15-minute fair value gap high, I mean the last fair value gap. Okay, don't get confused. And this one is the low. Now let me go to the chart. I mean the price action. Look where price went. Let me just. I can't reset right now because I have to talk about this. Then I will reset. Okay. So I can't just reset it right now. I have to talk about that. I will just move them over there. So you can see price actually came to the 15-minute last fair value gap. I love 15-minute chart, but as hourly fair value gap was over there and it was very easy to mark, that's why I marked it. Okay, so I'm just going to remove the 15-minute fair value gap. Instead of that, I will keep the hourly fair value gap. Now I'm going to 1-minute chart. Anybody has any confusion about this fair value gap, just let me know. Okay, bro, I have been learning SMC and it works for me. Should I jump to ICT or SMC is fine? Oh man, what a question, man. ICT is the inner circle trader. Okay, this is the name of ICT. I mean the Michael Huddlestone's YouTube channel. So and also the Twitter channel. Maybe he opened Instagram that has been hacked. So that is his channel's name. And SMC is this. All of this price action is called SMC, Smart Money Concept. Michael Huddleston is the father of both of them. I mean ICT, SMC, everything is Michael Huddleston's creation. Okay, that means ICT's creation. Whatever we are doing here, that is called SMC, Smart Money Concept. And ICT is not a strategy. ICT is the name, and the strategy is SMC. That means Smart Money Concept. I think it's clear, Ans Agarwal. So for Forex, what is the timing for macros? I don't know, Sage. I really don't know because I don't trade Forex. So I really don't know what is the macro time, brother. I'm very sorry, brother. You asked us to remind you something about an entry and MSS Saturday. Anapostle, I really forget that, brother. I really forget that. But what I was talking, but I really forgot that. To be honest, brother. I mean, from where I talked about that, I really forget. Pro by SMC, I mean BOSC, Hawk and water blocks. Okay, SMC means smart money concept. Okay, S for smart, M for money, C for concept. BOS is break of structure. So ICT told us the thing is market structure shift. Somebody like me who actually opened a YouTube channel, he wanted some attention, so he changed the name to CHOCH. That means change of character. Okay, CH for change, O for off, CH for character. So MSS, that means market structure shift, CHOCH and BOS, all of them are same. And what did you ask? And order blocks. Okay, order blocks. ICT introduced order block. I mean SMC is the creation of order block. Okay, I mean the ICT has created all of this concept. Whatever you are talking, SMC is the created by ICT. It's not different. If anyone tell you and show you something else, like if they just add supply demand to the SMC, then they're fraud. Don't go to them. They are fraud. To be honest, brother, trust me, they are fraud. SMC is the created. SMC is created by ICT. ICT just name. Michael Huddleston is his real name, but everywhere he use ICT. That means the inner circle trader. Okay, this is the name. So this is not ICT concept. This is a smart money concept. All of these are smart money concept. Order block, breaker block, liquidity, BOS or CHOS cock or MSS, everything is ICT's creation. I hope, and liquidity. Okay, everything is his creation. So don't get confused, brother. I hope it's clear to you. If not, just let me know or message me to Twitter. I'll reply you over there. Okay. So guys, this is the last hourly fair value gap. This is the new day opening gap. If you remember, this is the new day opening gap. It never traded. Okay. Now when at this is 9:30 candle. This is the candle of 9:30. Okay, so price went higher, it came lower, retraced to this. Oh, all the fair value gap has filled. Okay, if from here to here all fair value gap has filled, then it went higher. What did we do? We do nothing. Why? Because our expectation, we don't know where price will go. It when it came here to the new day opening gap low, then we are seeing prices going lower. What should we do? I need to actually add them right now. I want to show you something. Okay? So when price came here, what do we want? Do we want it will go higher or it will go lower? Obviously our expectation has to be it will go lower. Okay, and because it has traded the lower part of the new day opening gap, it can retrace from there. So will you take your entry? No. Why don't you take entry? Because this is just an signal that price would like to go lower, but will it go really too low or not? We don't know. So we are waiting. So when price went higher again, where did it go? The consequent encroachment of the hourly fair value gap. What is this hourly fair value gap? The last hourly fair value gap. That means if price would like to go lower, this fair value gap should hold the price. Nobody can close above the consequent encroachment. No, bodies can close above the consequent encroachment. It can close over there because this time we are expecting this fair value gap will hold the price. Okay, so body can close. Sorry, body can close at this level, but if it is broken, then our expectation will be market will go higher. So this time we will see this fair value gap can hold the price or not. Try to understand the concept rather. It is very important because if you are expecting market will go lower and you see body is actually closed above there, so you will be confused and you will ask me, why brother, why price closed over there and now you are using the concept? This time it should hold the price, so it body can close at this level, but this fair value gap can't be broken. Okay, now when we saw this the consequent encroachment rejection, what should our expectation? That market will come back again to the lower part, then we will try to find some kind of entry over there. When it will come over here, we will take our entry, right? From 1 minute chart, it is here and our stop loss has to be there. So it is now 18 handle. It is acceptable to take that entry, but most of the time you will see when you will use the 15-minute fair value gap or hourly fair value gap, this stop loss would be like near about 30 to 40 handle. Okay, that is actually out of our control or out of our limitation. So I really don't want to take my entry over there when I see some kind of big the what to say stop loss. Okay, so what I told you, when it will come over here, we will expect some kind of buy side liquidity taken and then the market structure shift. But this fair value gap, if this last breakaway gap is from 1 minute chart, then we will use this concept and we will take our entry over there if this fair value gap is from 1 minute chart. But if it is from higher time frame like 15-minute chart and 1 hour chart, we saw the rejection from consequent encroachment. Next time price came here, we don't take our trade because of the big uh, stop loss. We will wait for the setup. It will take some kind of buy side liquidity, then market structure shift and the entry. Okay, we should wait for that. If this fair value gap is from 1 minute chart, we saw the rejection from the consequent encroachment. Next time price will come to the lower part. See the curve. Okay, this is the curve. As this is from 15-minute or hourly fair value gap, that's why we saw big curve. But if it was from 1 minute chart, then we would see like a small curve. Okay, it will just go lower and it will tap to the lower part. We will see that. Okay, so let me actually first come over here. What was that? That was the macro. I have uploaded this macro. I mean I showed you. After taking the buy side liquidity, market structure shift, we will take our entry over there. We will go for 20 handle, right? So okay, so here is 20 handle and you can see this macro actually worked. So this is not garbage, sometimes it works. Okay. Not sometimes, most of the time you will see it works. Most of the time, so 80 to 90% of the time you will see, not 80 to 90%, actually 70 to 80% time you will see this works. Okay, that is my observation. You have to backtest it, you have to forward test it, then you will take your entry depending on the macro. Okay, just don't jump to the real money that because I told you it works 70 to 80% time. Okay, so when I have taken this entry, I actually wanted to show you. Okay, I just take this entry and I put my stop loss. So far I remember I put my stop loss below this lows. So far I remember, I am not sure, or maybe here. Okay, maybe here. I don't remember exactly. But you can see the execution I have uploaded over there. Okay. So price actually didn't hit over there. Instead of that, it hit my stop loss. I took a loss. But when price came here, I had a chance to take a winning trade. Instead of that, I took a losing trade. That was my first trade. That was the losing trade. Okay, so look over here, 2950. Okay, just don't see the figure. I'm just telling you that I take a loss over there, but I can take a winning trade over there. Why I did take a loss? It is because I was greedy. I was thinking price will take this one. I will be the profitable trader and I will take more profit. I don't want to take a small profit. That was the greedy. Why I told you to go for 20 handle, because 20 handle is the most obvious uh, liquidity run that you will see most of the time. It went at least 20 handle, at least. Okay, and if it is even S&P, then 5 handle, only 5 handle. And so that is the first concept. Now what is this 2 level? If you did your job, I mean the homework, you already know that this is the closing of Friday, this is the opening from Sunday. So what is this? This is the new week opening gap. As this is very small, I won't keep it to my chart as it is very small. Okay, if you see this type of a small new week opening gap, you don't need to keep them to your chart, but I marked it because I wanted to show you how beautifully it works every single time. Let me know one more time that you guys can hear me. Okay, I am still afraid about my internet, so I really need to know that it is working. So look over here, it has respected over there, respected over here. It went through this new week opening gap 2 times, then come back again, respected over there, respected over there, make it support, make it break. It has been broken again, support, failed to, I mean, it failed over here, supported, supported. Look over here, supported, rejected. See how beautifully it worked. Sound is all good, is working. Okay, thank you brother, thank you. So now I'm going to remove this level, this 2 level, the new week opening gap. Okay, as it is very small, I'm going to remove them. If you want, you can keep. Okay, it will respect it so many times, trust me brother. If price stay over here, it will respect it so many times, so more times. But I'm gonna remove this because I really don't need this one right now, and I didn't mark the new, I mean the opening gap, because that is also not important for describing today's price action. That's why, but all of that level is really important. You have to keep them to your chart. Okay, so that was our that was my first loss. Okay, you see my stop loss over here, I stopped out, I take a loss. What was my expectation? Okay, maybe I'm wrong, market will go higher. Is that my expectation? No, I was very strict to my thinking that market has rejected from there, so it should go lower and take the sell side liquidity. So I take another shot over here. Look over, just over here. Okay, I took another shot over there. What was the setup over here? Is there any setup over there? Do you see any setup over here? There's nothing. I just take a short because I was thinking I don't want to take a small profit, I want to take more profit. then I stopped out again over here. I stopped out over there. Okay, now two times I have already stopped out. Still I'm thinking market will go low. Look over here, I took a buy. Look here, I took a buy. Why? I saw market is going higher. It retraces, it's going higher. So I changed my bias. I'm thinking, okay, maybe market will go high. Okay, I took my buy over there. I stopped out over there. Over there. Okay. So until here, I did the thing you will do if you don't believe your reading price action. Now, what is reading price action? When you have seen it has been rejected from there, what should be your first expectation? Just forget about this macro, because that was the macro entry, so that is totally different. It doesn't need to depend on the high time frame. Okay, don't forget to give me the like. Guys, I'm sick, still I am awake, and I am trying to describe the price action so that it is easier for you and you don't think this is sloppiness. This is not sloppiness. We expect the sloppiness after a big run in the midnight, or after the big news, or before the big news. We actually expect sloppiness, and we expect sloppiness when we see dollar is going higher, and even in Nasdaq is also going higher. Okay, Hindi. Oh man, you have written down something in Arabic. I don't. I mean, I can read Arabic, only the Quran, but the normal word I can't read. Okay, I'm sorry, brother. So macro is different. Just forget about this one. But whole of this price action, the entries I took over here, that is bullshit. There was no reading price action. That was just randomness. I took a short. I mean, stop out over there, loss over there. So I was very hurry to mitigate my loss. Okay, until here it was I wasn't reading the price. I was just randomly gambling over there. All of these areas I was gambling. Okay? Now if you read the price, this is the last fair value gap that should hold the price. You saw this time price actually hold it through the consecutive encroachment. Perfectly rejection from there. Price where should it go? It should go lower and take all the sell side liquidity? No, it shouldn't take that. It should not take this sell side liquidity right now. Okay, if you think this sell side liquidity or there is relatively equal loss, you see this low, they are the relatively equal loss. Let me mark that one first. That will be easier for you. I mean, this relative equal loss, market should take them right now. No, why? It is because before taking them, it should come back again to the lower part, as we saw the rejection. If it doesn't come back over there and instead of that it went lower, we have nothing to do. Totally, we have nothing to do. Okay, so when we see prices going lower, we shouldn't take sell. When it is going higher, we shouldn't take buy. We shouldn't do anything. Okay, we should wait and read the price first. On the first thing upwards, there is a little fair value gap. Also, what did you say? On the first swing upwards. Okay, so first swing. Can you please tell me the time, brother? Just tell me the time, okay? Because there are so many upwards swing. This is. So let me just know what time you mean. So when price came here and failed to take this equal loss, look, this is the equal loss, and I always mark the equal loss as my liquidity taken. Also, there are some equal loss. If you come over here, there is also some equal loss. You see this low and this low, they are relatively equal low. Okay, 940. Just let me check. So this is the 940. Okay. Uh, okay. So this one, are you talking about this one? I told about this, brother. So I mean, if you see this, there is a fair value gap that is above the liquidity or at the level of the liquidity. You don't care about that fair value gap. Okay, so this fair value gap you shouldn't care. Maybe this time it worked. Okay, maybe, Just let me mark this one. Hmm, I'm not trying to make myself clear or make I'm not trying to make myself right. I'm telling you the thing I saw so many times, okay? So I am telling you the thing I saw so many times. This fair value gap is above the liquidity level. Look, this is all the liquidity level, okay? You see, this is, if you just mark this one as your liquidity level, it went above this liquidity. So this fair value gap is above the liquidity. If you see a fair value gap that is above the liquidity or at the level of the liquidity, you have to forget about that fair value gap. I mean, that fair value gap is not fair value gap. That is kind of what to say. Mm, what to say? I really don't know what to say. But you have to avoid them for marking as your some kind of entry or something. Or the I mean the last fair value gap. I mean the breakaway gap, something like that. Okay, you can't mark it as your fair value gap as because it is above the buy side liquidity. If you see it is at the buy side liquidity or above the buy side liquidity, you have to ignore that fair value gap. I mean, this time it worked, but trust me brother, most of the time you will see it is actually nothing for working. Okay, I mean, I hope you'll understand the thing I tried to tell. Okay, so whatever I was talking. So when price came here and failed to take the relatively equal lows, it started to go higher. Okay, so it is where it is going. It is going to tap to the lower part. I should wait until here. If it can do that, we already know how to use the fair value gap. What I told you before last month, I mean before this month, I told you brother, this month I am going to talk about the fair value gap, how to use the fair value gap. If you know how to use the fair value gap, you will be the market maker, to be honest brother, because this fair value gap is the base or is the heart of the ICT concept, the smart money concept, or the Michael Hardstone concept, anything you want to say. This is the heart. You will see every time, every entry, depending on the fair value gap, is more than perfect every time. Okay. Hey Remis, yes, how are you, brother? You're late. Sorry, brother. I'm just kidding. So we know we when we see the rejection from the consequent encroachment, price will go to over here. Okay. So it came to the lower part. Now we are reading price now. Okay. So we saw this one. Now will we take our entry over here? No, we should wait for the entry setup because this fair value gap from higher time frame. It is not from 1 minute time frame. If it was from 1 minute time frame, I have already taken my entry over there, and I would put my stop loss above the highest high. So that was the highest high. I would put my stop loss above that highest high. But as this is from higher time frame, I need the setup. Now when price came here, I saw it has taken the buy side liquidity. I'm not looking for buy entry, I'm looking for sell entry. Why? Because I failed to take my entry over there. Now I was waiting for the setup. Okay, so it has taken the buy side liquidity. Now I need a market structure shift. Price came lower. Did it shifted the market? In my opinion, it didn't shift the market. Okay, so price go again above. It gave me the market structure shift over here. Look over here. So it has given me the market structure shift. Now if you ask me why brother, why this one is market structure shift, uh, I mean in your word, why this one is market structure shift, I will tell you something that is little bit difficult, but I mean I really didn't clear this one. But I told you every fair, I mean weak consequent encroachment is the fair value gap consequent encroachment. Okay, this law has traded this this week's consequent encroachment. That is why this is valid for me to shift in market structure. Will you take the take this market structure shift? Not now, not now. Now you will wait for shifting the clear shift in market structure. Okay, the clear shift market structure. Now if you ask me brother, then I will miss this entry. So what, you will get 1,000 more entries where you will see very clear market structure shift. Try to understand brother. Okay. No Jeffrey, you didn't miss the info. I have just started. Okay, so just stay with me. Whatever I told that price has been rejected over there, so we are reading the price when it come to the lower part of the hourly fair value gap. Now we are looking for the setup. As this is from higher time frame, we are not allowed to take our entry over there because our stop loss will be so big. That's why we should take, I mean, we should wait for the setup. Now, did I take my entry after the market structure shift over there to this fair value gap? Just let me mark the fair value gap over there. So this was the fair value gap, and this is your market structure shift. Just let me shift the market structure. Okay, so this is the market structure shift, and this is the buy side liquidity taken when price came here. Did I take my entry over there? No, I didn't take my entry over there. I took my entry over there. Why did I do that? Just forget these two. That on was another topic. I already described why I took that entry. Okay, I took my entry over there. Look over there. I took my entry over there. I added more over there. So that is 5. See, sell 5. That I added over there, and that was my first entry. Then why I have taken this one? If you remember last Friday or I mean the last Saturday or Sunday, there was a guy who asked me. I forgot his name. Brother, can we take our entry not depending on the, what to say, the market structure shift? We don't see on the market structure shift, but we take our entry? Yeah, obviously we can. Now I am going to add something. It is going little bit confusing, but I'm just going to add it. Okay, look, when price came here, where did it come? It has come to the new day opening gap, consequent encroachment. Go to your chart, mark the consequent encroachment of the new day opening gap. So when it has actually traded the consequent encroachment and got this big run, I mean the rejection from the consequent encroachment, I wasn't thinking that it will come back again to the lower part. Though this is the rule. Whenever this one is the normal fair value gap, this is also the fair value gap. Everything is this new week opening gap, that is fair value gap. Everything is fair value gap, and every fair value gap has to work the way it works. Okay, I mean the way I told you it should work like that way. I wasn't expected this run, to be honest, but I wasn't expected that run. I was thinking it will just come to this fair value gap. When I saw this rejection, I was thinking it will come to this fair value gap and then it will be rejected. But I was very sure. If you have already watched the execution video I have uploaded to my Twitter, I put my stop loss above this. I mean this candle above over there. Why? Because I was careful that it can come to the lower part, but it can never go above that high. It can never go above that high. Why? As we got the confirmation from here, consequent encroachment rejection to the lower part, and here consequent encroachment rejection to the lower part. So it has to come to the lower part. It can go above the higher part. Now, what is our narrative? Today is Monday. Price should go back where? It should go back to the Friday's range. What it is telling us? It is telling us, brother, take sell, take sell, take sell. We are very far from the Friday range. So I am going back to the Friday range. Please take sell. I have already shown you that I am going to lower. Okay. So in that type of case, when you know how to read the price, you can take this type of entry. Right now, will you take this entry? I don't think so. This is the good time. This time you will wait for the market perfect market structure shift, fair value gap entry. Okay, and then when price came here actually to this order block, just let me mark the order block. I added more over there to this order block. I have added. If you see when this can actually my internet was slow. All if you know that my internet are slow. So when it has actually tapped the order block level, I press sell button, but unfortunately it felt little bit lower. Okay, so I added over there. Where did I target? Look over here, this candle over just here. Okay, why I have targeted over there? Because I saw this sell side liquidity. Okay, this low and this low are very near. Now if I would like to mark this low, if I would mark that, this two low will be similar, but this one will be so far from this low. I am not agree with this. I would love to mark the obvious liquidity. So that is my obvious liquidity. Where price did go? It came here. there is another thing. Why I have marked that one? I mean, why I have marked that one? First, I have marked to this low. If you remember or not, mark this low. Then I go back here. Then I come over here. I saw there was the sales liquidity and the execution. I mean, I have closed it over there. If you watch the execution, I actually plus all of these three, right? 2950, 2250, 950. So my loss was 6150. I mitigate my loss. I just put my target profit at the level where I can mitigate my loss. Okay, and when I see there is a very relatively equal loss, I was putting my stop loss, I mean the target profit over there. Now if I see that my actually mitigated loss is over here, what did I do? I never hold my trade until there. I would close my trade as soon as possible, maybe below this low. I would close my trade over there. Why? Because there was no relatively equal loss. There is a single low. You see, this is a single low. So I don't know price will go below this low. I really don't know. If it don't go, then what will be happen? I will take another loss. That's why I always go for the perfect or absolute obvious liquidity. Okay, I know my English is broken. So if anybody is new here, you will think this guy has very broken English. But it's okay, brother. If you are new, you can stay. Sometimes you will learn so many things, trust me. So that was my mitigating loss. Okay, now I take another loss. I force market to give me another loss, and this time I took this entry to show you that if I want, I can take so many entries one after another. I can do that. All of these things, some of you will think, okay, this guy actually takes so many losses. Now he is showing us something that is bullshit. That's why I force myself. And Akhtaruzzaman, I don't know he is here or not. At the 1206, look at this candle. I asked him, I was just messaging him. He actually showed me that he took this entry. I mean, he didn't took, he just marked this entry. So I asked him, brother, right now I'm seeing another entry. Can you mark it for me? If Akhtaruzzaman is over here, please let me know that you are here. That will be great for me. Okay, I mean, that will be helpful for me. I'm not lying, that will be proved. So I told him, brother, I can see another entry over there, can you please mark that for me? I told him. Okay, and why I have taken this entry? So price has actually what it came here, where is the liquidity? This all three is my liquidity level. Okay, price came here, went above again. Why did it come here? That is another topics. I mean, it has actually retested this I mean, the last fair value gap. You see this last fair value gap, it has retested that last fair value gap of this big swing low, and then it went below this fair value gap. What is this fair value gap? This is my last fair value gap. Why this is my last fair value gap? There is another fair value gap over here, maybe very little fair value gap over there. Now look, before, this is my liquidity. All of this my liquidity, they are relatively equal lows. So this is my liquidity. If you see the fair value gap at the sell side liquidity or below the sell side liquidity, that is not my concern. I don't care about them. I don't care about them. I want the last fair value gap that is above the sell side liquidity, not at the level or below the level. Try to understand, brother. So this is the first fair value gap of this upward run. Okay, from here to here, this run, this is my first fair value gap. What I have done, I actually, when price went through this fair value gap, I have uploaded this entry as well to my Twitter account. Please check that. I have written down everything over there. Okay, so when I have seen this candle has broken this fair value gap, and the very next candle came back again into the range. Okay, I got confused. Is that fake breakout, or market really would like to go lower? As I have very clean sell side over there, my narrative is telling me market should go lower. I got the rejection from all over this place. I read the price from there until here. I'm reading the price. So this is the last fair value gap that should hold the price and send it back to the back for the buy side liquidity. It should do that. This fair value gap should do that. Now If it is broken, excuse me, if it is broken, then I will go for short again. But is it really broken? I don't know. Now I saw very next candle, this one, okay. I saw it has broken again below this low, and the very next candle it went above this parallel gap. Two break, two fake breakout is can't be happen. I mean, two fake breakout is not possible. Yeah, it's possible, but not all the time. Okay, I think 1% or 0.5% of the time you will see two fake breakout. So when I saw this candle has closed below this fair value gap again, I got sure that market should go lower. That was my expectation, okay? Because my narrative was telling me market should go lower, and this very clean sell side liquidity, that is very clean sell side liquidity from all of this place. This is very clean sell side liquidity. So market should take that sell side liquidity. Now, when price look over here, this candle, okay, when it went through this consequent encroachment, you see this when I saw this breakout candle over here, the very next candle, where did it came? The consequent encroachment. I didn't do anything. The very next candle it went lower. To be honest, brother, it was a lower run. When I saw it went below this consequent encroachment, I took my entry. Now my internet was slow, so my entry actually put over there. But to be honest, brother, when it went lower to this consequent encroachment, I took my entry over there, sell entry, okay. And then it actually closed as a up close candle. So let me show you clearly. It closed as a up close candle, but where did it close? At the level of the fair value gap high. It failed to, to break that high. When I saw this, I got this one as a fake breakout. This was the fake breakout. This wasn't fake breakout. That was telling me I'm going lower, brother. Everything is telling you I'm going lower. Why you don't take a sell? When I saw this candle, I get sure it this is fake breakout. Market went above, it come back again to the fair value gap. Okay. Very next candle, did it break this fair value gap? Oh man, it failed. It failed. Okay. So this candle, where did it go? It has broken this fair value gap. When this price came one more time again, I took my sell. Now where did I take my sell? This sell, where did I take? You see this, to this the water block level, I sell over there. My sell entry taken, it filled over there. And that is also for my internet. You are my proof that my internet was fucked up. Okay, so you are my proof. So I took my sell over there, but it filled over here somewhere. Okay, then actually it has retested again the water block level and also the fair gap level, and it went lower. Now I took my target profit over there. I put my target profit over there. Look over here, I put my target profit over here. Why did I do that? You see, this is the last fair value gap. This is the last fair value gap of this big run. This is the last fair value gap. Now brother, it is at the the liquidity level, or above the liquidity, the below the liquidity level. Why did you put it as your last fair value gap? You told us that if it is at the liquidity level, you are not going to mark them. Okay, okay, let's try. Okay, I will tell you another things. Is it at the level of the sell side liquidity or above the level of the sell side liquidity? I think it's above the level of the sell side liquidity, so it's, you can mark that as your breakaway gap or the last fair value gap that can hold the price. Okay, another thing is I have a bigger liquidity level below this low. Below this liquidity I have bigger liquidity level, which actually filled my expectation. Okay, the equal lows. So obviously this fair value gap is above the liquidity level. Anybody is getting confused, let me know. I am not going to read your comment right now. I need to finish this first, then I will talk. Okay, I will read your price now. So when price came here, it started to go higher. From where? From the last fair value gap. Okay, that means this fair value gap has hold the price. This fair value gap hold the price. Now when you will see this type of big run, you take your entry over there, you came here. how many pips over there? Let me just check. Actually I didn't check. If you mark from there to there, it's near about 15 handle. Okay, not so big, but for me it's enough. Okay, when it above there, look from this last fair value gap, it above there, what should our expectation? I didn't take my entry. I was just trying to see what is price doing over there, and I wanted to see, I mean, give you the screenshot so that you guys can understand what you should learn. I mean, what you should see. Now, let me actually tell you. This is the last fair value gap. Try to understand the difference about the last fair value gap. This is the last fair value gap. What should our expectation? If price would like to go higher, this fair value gap should hold the price. Now, when this should hold the price, body can close at the lowest level of this fair value gap, at the lowest level. Or if it is a higher fair value gap, body should not hold, body should close at the higher level of the last fair value gap. It can close above the high of the fair value gap. It can't close below the low, I mean below this fair value gaps low. Okay, it can't, because this is actually holding the price. I don't need the consequent encroachment holding. I need the this whole fair value gap should hold the price. Okay, whole fair value gap. Try to understand, brother. Now, when this should be expecting from this fair value gap, this is a big run, right? When price should come back again to this fair value gap, I don't want to see any candle will close below the last fair value gap. Let me just try to understand, brother. It is very important. If you don't understand, then you will be confused all the time, right? This is the higher run. This is the last fair value gap. It should hold the price. Nobody can close below the consequent, I mean below the lowest level of this fair value gap. When it will close below the consequent, I mean below the level of this fair value gap, this one I am thinking this one is not going to hold the price. If I saw a candle will close above the last fair value gap, my expectation will be market will go higher. How did it will go? That is later I'm coming. Okay, how it will go. But first thing first, if I want to see this is the last fair value gap that will hold the price, nobody can close above this fair value gap. Nobody can close. Okay, so here just let me actually cancel this one right now. Okay, so it should hold the price, but it failed to hold the price, so market actually broke this fair value gap, the last fair value gap. When it has broken the last fair value gap, now what should be our expectation? Our expectation will be now price will come back again to the consequent encroachment. Nobody can close above the consequent encroachment, and then it will give us some kind of rejection of this fair value gap. It will come back again to the lower part. We will take our entry over there. As this fair value gap is from 15-minute chart, sorry, 1-minute chart, we will take our entry over there. Okay, if we see some kind of, I mean most obvious sell side liquidity, if there is most obvious sell side liquidity, then I'll just put it over there. Okay, if there is most obvious sell side liquidity, then this entry is valid. If there is no sell side liquidity, it is not valid. Now I will talk about here something. Now this is the last fair value gap, right? Just think, it has hold the price, nobody closed below this fair value gap, nobody. It went higher. What do? You will wait, it will come back again to the consequent encroachment, it will reject it from there, it will come back again to the upper part of the fair value gap, then it will go higher. Or it will actually take some kind of sell side liquidity, give you a very nice market structure shift with a fair value gap, you will take your buy. If you see there is very clean buy side liquidity. Until here, is it clear or not? Let me know. Okay, just let me know it is, this thing is clear or not. So when this fair value gap, the last fair value gap has broken, how should our expectation? It will come back again to the consequent encroachment. Will we take our buy sell over there? No, we will wait, it will come back again to the lower part. Did it come? I mean, is it clean? Am I showing you this for last 1 month? Brother, why didn't you take that entry? I didn't need to take the entry to show you that I saw this beforehand. I don't need it to I mean need a take entry, to be honest, brother. I'm doing the things you should expect how to do this. Whatever I'm skipping, I'm just trying to show you how it works. Okay, now let me actually extend it little bit further. If it would like to go higher, where did it go? It can go above this high because this is my highest high. Okay, now just think this candle actually came here somewhere, maybe to the consequent encroachment. Okay, it maybe came to the consequent encroachment, the body has closed above the low. Just think, now when this time it will come here, just think it will come over here, you will take your short over there, and you have a high maybe here. Okay, what will you do? You will put your stop loss over there? No, you will put your stop loss above the highest high. So there is my highest high. You will give little bit space. Okay, because of the week, just give little space, maybe one handle, two handle, you will just keep on two handle. Okay, why? Because price can easily go above this high and take the buy side liquidity from there, but it can't go above that high. If it go, that means your whole reading price action is maybe wrong. Okay, every time you will be right, every time you will be the profitable trader? No man, it's not possible. Nobody can do that. Nobody, simply nobody can do that. So if you took that sell over there when it came to the lower part, if you put your stop loss above, now in that case where should be your stop loss? Above this high? No, your stop loss will be above that high, because that is the highest high. Price can easily go above that high, take the buy side liquidity, then come lower. Okay, it can come then lower. So you have to be careful about this. When you will see your last high is over there, you have to put your stop loss above the highest high. So before this high, this swing high is the most obvious swing high. Okay, so if I didn't see this swing high, I would put my stop loss above that high. Look over here, above that swing high. If this high wasn't there, okay, I would put my stop loss above there. Where is my target? I mean, where should you target? To this most obvious liquidity? No brother, never do that, never ever do that. Just let me little bit further. Okay, before this highest, I mean the, what to say, extreme, yeah, extreme sell side liquidity, you will see this low and this low, they are relatively equal low. That is your sell side liquidity. That should be your target. This lows is your target. Okay, and your stop loss will be above this swing high. So brother, it is near about 1 is to 2.35. Why don't I put my stop loss above there, and I will take my profit above there? Okay, if I do that, you see it is near about 1 is to 7. Oh man, 1 is to 7. Brother, what do you need? You need to see this one, I mean this thing. I don't see this type of things. It's just you are making your risk higher. You are just doing something that is high risky. If you put it over here, if price go above that high, take the buy side liquidity, then go lower. If you target over here, maybe you are getting 1 is to 2. Okay, 1 is to 2, just think like that way. You get 1 is to 2, very low comparing to 1 is to 7, but you are profitable, right? You are profitable if you just take maybe one contract, just one contract. So if you take that entry to top step, it's almost near about $300. Yeah, near about $300. But if you take this entry to AMP, you are already $750 profited. Okay, so why you put your stop loss over there, and you will whenever you will see some kind of big run, you will be start to trail your stop loss. Okay, why you will do that? That is my question to you all. But if you really love the risk reward ratio, I don't know how to put the stop loss depending on the risk reward ratio. I put my stop loss depend on the price action. Okay, where price can go. Okay, I think it's getting clear to you guys. But if something is unclear, let me know, I will explain. Okay, now why don't you go for the extreme sell side liquidity? Look over here, what it has done, it just came to the lower part, almost very near, right? It was just going to clean the sell side liquidity. It's just over there, not over there, here. Okay, I'm sorry, I over there. So it was just going to clear the sell side liquidity. Then what happened? Price went higher. If I don't care where you will put your stop loss, you will be stopped out. You will be stopped out. Why do you take this type of risk? If you see there is a sell side liquidity, that is most obvious, price is going to take that. But just before that sell side liquidity, there is some other sell side liquidity that is also more obvious. You will close your entry over there. Now you can tell me, brother, what I can do? I can actually put my target profit over there. I will take some partial over there. Yeah, you can do that. If you want to do that, in that case, when you will take the partial over there, you have to move your stop loss to the break even. You have to do that. Okay, so that if you are stopped out, you will be break even, and also you have already taken some partial. Okay, so you are still profitable. So I am not going to tell you that please don't do that. You can do that, but if you ask me what I do, I will take my entry over there. I will put my stop loss above that high. I will put my target profit above, I mean below or at the level of the sell side, maybe little bit, maybe one tick below the sell side liquidity. Okay, I mean this pin loss. So that was thinking. Now when I have uploaded the video, if you see, I told that I want some kind of big run now, and it gave me the big run. Okay, then I told you now it should go again. I am expecting some kind of lower run. Let me just a second. Not over there, over there. I'm gonna play this video. I'm sorry, but I have to play this one. Okay, just a second, because I want to show you the perfection. Was that this video? So- okay, so it was this video. I will just a second. Okay, my internet. So that was the thing. I write it down that I have taken the loss at, I mean this was the loss. And oh man, it was very, I mean, what to say, the resolution is totally bad. I'll just, okay, so I write it down that big run now, and I got the run. Then I will write it down again. Just go to my Twitter and watch that one. I will write down again big run now, look. Okay, so I write it down, look. I will get the big run. Just a second, I'll get it right now. Look over there, I got the big run over there. Okay, so I write it down. I know magic, something like that. Why I was doing that? How did I know that I will get? And at last I told you that within two candle this is going to take the entry, I mean the sell side liquidity. But actually it has taken three candle. That wasn't expected. I'm sorry for that. That shouldn't be happen. Now what was the reason? It was over here actually. What was the reason for knowing this? I'm going to get a big run over there. Look, this is the funniest thing. Okay, the Twitter video is hilarious. Oh man, Julian, I told you that just go to my Twitter and watch that video, then you will understand the thing. Why? How did I know I am going to get a big run over here? Look at the time. What time is it? It's 11:29. Look the time over here. Okay, lower part. It was 11:29. That was the macro time. Okay, there is a macro which is actually 11:29, 11:30, 11:31. So 3 minute macro run, just 3 minute macro run. So I know I am going to get a big run within this 3 minutes, either 29 or 30 or 31. Within this three candle, I am going to get a big run. Now, what is the second time? This was the second time. How did I know I am going to get another big run? There was no macro. How do I know? Look, this is the thing you have to understand. It was actually making the buy side liquidity. Okay, this was making the buy side liquidity. And when I saw this candle, specifically this candle has taken the buy side liquidity, I write it down, not here. Okay, not here. here I write it down. When I saw this has actually taken the buy side liquidity, I write it down. I'm going to get another big run. Look, big run. Okay, so price actually came one more time above all of this buy side liquidity. After that, I got this big run. See this big run. So I knew that way. I actually watching the price candle by candle, tick by tick, what it is doing. What when I am going to get the big run? How do I know this will be the big run? Okay, now come over here. When price came here, this candle, okay, this candle, I saw this candle. I told you within two candle, sorry, not that candle. When I saw this, oh my, sorry guys, yeah, sorry, not that candle. Actually, when I saw this candle, it has immediate rebalance. Okay, it has immediately rebalanced the price. So in that candle, I told you within two candle, one two, within two candle, price is going to take the sell side liquidity. How did I know that within two candle it will take the sell side liquidity? I mean this candle and this candle, within these two candle price will take the sell side liquidity. How did I know? I saw this immediate rebalance. This is immediate rebalance. ICT also told about this. This is a little bit different thing. Whatever. I'm just trying to tell you that this is not magic. This is not something I know extraordinary. I am extraordinary. I am extraordinary person. Something like that. I'm not telling like this. This is all price action, and I learned it from ICT. So don't think it is impossible. You can never do that. Don't just think that. And I'm not going to show off that I know better than all of you guys. I'm not trying to do that. I'm just sharing everything. Why I was expecting big run over there, why I was expecting big run over here, why I was expecting within two candle it is going to take the sell side liquidity. The thing is, when I saw this immediate rebalance in that candle, I saw the what to say, the bear candle. I write it down within two candle it's going to take the sell side liquidity, but it actually takes three candle. So I am wrong. Yeah, no, I know I am wrong. I am not a good guy, and all of this thing I know. So I'm wrong this time. Yeah, I am wrong. So it has actually taken three candle to take the sell side liquidity. Okay, that is the thinking, guys. And later you can see it has taken the sell side liquidity. The most obvious sell side liquidity price is right now over here. Where did it came? Where did it came? Oh brother, why did you keep your new week opening gap? It shouldn't work. It has already traded so many times. Let me go to the 15 minutes here one more time. Okay, so it is 15 minutes. Oh man, it has traded so many times. This opening gap has traded. See how many times it has been traded. You can just remove the new week opening gap. Oh no man, I'm not going to remove this new week opening gap until price leave this area. Until price leave this area now, I'm not going to remove this new week opening gap, because this is my level. This is the way I understand where price can go, where it should, I mean where it should go and how it will go. Okay, so this is the actually thing. And where did it come? At the level, I mean at the top of the new week opening gap. Oh man, that is not correct. It is actually some kind of coincidence. So don't think you know you are the better or you know everything. I am not telling this, but I actually missed this fair value gap. I'm very sorry brother, I really missed this one. Right now when I saw, I mean I was just watching this price action over here, I saw this 15-minute fair value gap. So I will use this one later. I mean I hope I can use this fair value gap later. Right now I should look for this fair value gap. I should look for that. What is it actually doing over there? I will look for that. Okay, not importantly because this is very small, so I will just look for it, how it react over there, and then I will try to do something over there. Okay, and but this fair value gap will be very important for me because that is the last fair value gap. Okay, now this is the time for reading your comment. I know so many people actually written down. Okay, let's try. One thing pursuing upwards, there is a little, okay, I talk about that George. Remigius, I also talk to you. Remigius, hi brother, I know family stuff. Yeah brother, Jeffy Makasi. Hope I didn't miss. No, you didn't miss. I hope you got everything. ICT product. So you were streaming. Yeah, brother. I just come back because I was trying to do that. I was testing. Okay, that my internet is okay or not. But fortunately, it is working. Let's see. Thank you, brother. I wasn't able to load my YouTube actually. So I'm sorry for that, brother. I couldn't join to you. What's the difference between this little parallelogram and the little one before the buy side? The one I mentioned before. Okay, so you have mentioned a parallelogram over here. I told you that is above the buy side liquidity. Look over here. Where is your buy side liquidity? This is your buy side liquidity, right? This is the highest buy side liquidity. So above here is also your buy side liquidity. So this fair value gap is above the buy side liquidity. George, I don't know you got your answer or not, but I'm going to explain it again. So this fair value gap is above the buy side liquidity. If it is above the buy side liquidity or at the level of the buy side liquidity, I don't count it as my last fair value gap that can hold the price. That is my thing. This time you see actually price came here, this fair value gap has hold the price this time. Okay, most of the time you will see this fair value gap actually used as a unused fair value gap, or you can see just a gap, not fair value, just a gap. Okay, and what is the difference here? Look, if you just mark the extreme sell side liquidity, it is above the sell side liquidity. It is not below the sell side liquidity, it is above the sell side liquidity. Here I had buy side. Okay, try to understand buy side liquidity, above the buy side liquidity, at the buy side liquidity, the fair value gap is not valid. Below the sell side liquidity, at the sell side liquidity, the fair value gap is not valid. Now where is your sell side liquidity? Above here, this is your sell side liquidity. Look over here, if you don't go for the extreme one, this is your sell side liquidity. This, look over here, this is your sell side liquidity. So this fair value gap is above this sell side liquidity, not below the sell side liquidity or at the level of the sell side liquidity. Okay, look, this is your sell side liquidity, so it is above the sell side liquidity. That is why this one is valid, this one is invalid. I hope it is clear, brother. Where did the high at 939 went to? Julian, where did the high 931 went to? It came to the constant encroachment of the hourly fair value gap, the last hourly fair value gap. Now if you go back, I mean previous here, maybe you will get some kind of, I mean some kind of fair value gap, order block, anything you can get, but I really don't care about that one. I care about this fair value gap. This one should hold the price, that is my whole concept. And when I saw it has been rejected from the constant encroachment, then I come to this point that it is going to reject from the lower part. Okay, brother. Okay, I think you got. For me is clear, very logical. Thank you, Remigius. Domino, very clear. Thank you, brother. Julian, that Twitter video. I read your comment. Don't fun me, okay, Julian? Don't fun at me. I'm just kidding, brother. I wasn't talking about your entry video, bro. Lol. The video that came out when you first opened Twitter. Okay, 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 brother. I got your point. Mm, the woman, right? That was a woman. I really don't know because sometimes it comes. I don't follow anyone. I mean, if you just come over here, I just only follow the ICT, the inner circle trader. I never followed anyone else except ICT. Uh, Look over here. So only on following. Okay, so I don't follow any other one. But when I am here in my home page, yeah, sometimes there are some videos I really don't like. Over here, look, this Messi. I really not. I'm not a fan of Messi. I'm a fan of Siron. I mean CR7. So it is over here. So I'm not responsible for this type of videos. Okay. Yeah, I remember there was a girl. I mean something, whatever. Tito is not holding any information back, is given it out. Please take note, my diary is almost half full. Get everything, please. No, I'm sorry, brother. So many information, right? But I'm trying to make this same. Right? I'm not going to change my commitment one after another. Okay? I'm just telling you same thing again and again. Same thing. Okay? So I have a question. If that doesn't make you annoyed, the entry you explained was during the New York lunchtime, and as far as I know, you don't trade during that time. Why today? The ICT prototype, you have to just watch the video because I have written down over there. This is New York lunch hour time, and in and out we are not permitted to take this entry. I am doing this because I love to break the rules, and I know if I take a loss I can take so many entries, winning entries in a row. So I have written down everything to that lunch hour entry, to the entry videos. Okay, so I am not going to open the video over there because it will be like very difficult to understand. I mean, but let's just let me try. Okay, so that was the entry. Sorry. uh, so here, don't forget it is lunch hour, in and out. Okay, so I have written down everything over there. We are not permitted to take this entry at lunch. Okay, don't try. Just a second. Just okay. I'm sorry. How to pause it? I can pause it from here. Okay, so don't forget it is lunch hour, in and out. We are not permitted to take entry at lunch. Don't try like me because I break rules. I know how to take so many winning trade in a row. I also know where should I target. Okay, I have written everything over there when I have taken that entry. Also, I think your confusion has cleared. So Friday 12:15 BC, is that valid fair value gap, as it took the Friday 10 by said liquidity. Friday 12:15, from which time frame, Bamsi? And it is above the buy side liquidity. Just let me know the time frame, then I will go over there. Okay, 12:15, Friday 12:15. Just let me know which time frame, what time frame you are talking about. Okay. Proto, also if possible explain the losing trade, like what was your thoughts and what went wrong. In my opinion, people can learn the most from their mistake, and I want to learn that as well from ICT prototype. Actually, that wasn't losing trade, that was the winning trade, but I make them as my losing trade. If you just watch the video, I've uploaded that on as well. I told you how to turn a winning trade as a losing trade. I mean, the macro entry, that was a winning trade, but later that was actually I showed at the beginning of the streaming why I have taken these three losing trade. I showed them what actually we do if we don't read the price action. Okay, so this all the, like this entry, that was the winning entry, I turned it as a losing entry. Then this entry I took it without any logic, there was no logic. And this entry I took it because the thing, every new trader thought that I have already taken two losing trade, I have, and market is going higher, I'm going to take a buy. So all of these entries are actually invalid. But if you read the price, then you will start to take the winning trade. That is why I actually didn't clear all of this thing until now. I put it over there. I talked about the psychology, trading psychology last Saturday, so I need to give them some example. Okay, brother, so that is why I took that first three entry one after another, even though that was a winning trade, but I turned it as my losing trade. And I have uploaded the video to my Twitter. You can see that I have written down over there how a winning trade turns into a losing trade. Okay, I hope it's clear. And I understand, but why the side on the liquidity makes it valid or invalid? understand, but why the side by side on the liquidity makes it valid? No, brother, I am not telling you that it is making that valid or invalid. What I am talking about is I saw most of the time at the level of the buy side liquidity or above the buy side liquidity, at the level of the sell side liquidity or below the sell side liquidity, the fair value gap that actually don't give some kind of precision. Okay, I mean, what to say? We don't get some kind of precise price action from there. Okay, that is why I'm telling you that to avoid that price action. That is my observation about the market price. I'm not telling you to avoid that. Okay, in my opinion, this fair value gap is not valid because I will not get some kind of price action that repeat in the market again and again. Look over here, this thing you will get every time if you mark this the lowest fair value gap. Okay, just let me mark this fair value gap. This is the lowest fair value gap of this run, right? Just let me mark this one. I'll just mark this one. Now look over here, do you get any kind of precise price action to this fair value gap? I don't get it. Now why it is not valid? Because it is at the level of the sell side liquidity. Just look at this sell side liquidity, it is at the level of the sell side liquidity. In that is why it is not valid for me. Now if you can ask me, brother, then what happened over here, what it has done? It has no problem. Obviously it has a problem. In my opinion, this is the relatively equal loss, and I always go for the relatively equal loss that is more stronger than this low, in my opinion. Now if I remove that one, if I mark this sell side liquidity, I will go for this sell side liquidity. I will never go for this sell side liquidity because that is not my sell side liquidity. Obviously that is sell side liquidity, but I will go for the relative equal loss that is more stronger to me. Okay, so this fair value gap and this fair value gap, both of them are below the sell side liquidity. So it is below the sell side liquidity, I will avoid them. I told this, I mean, to my previous streaming as well. So if you miss it, I think you can reverse them. Okay? So that is the first fair value gap that is valid for me, and that should work as a, I mean, the last fair value gap that should hold the price to send it again above to the market price. Okay, and if you see this fair value gap, how beautifully it has worked. And if you have any confusion, you can say I took my sell or buy, whatever, I took it depending on this fair value gap, not all of this fair value gap. If I would try that on, I would be stopped out because this is not precise. I hope, brother, it is clear. Okay, bumps, I will go to 15-minute chart and just let me come over here. So this is the 15-minute chart. You talked about Friday 12:15, right? Is this day Friday 12:15? Okay, so that is Friday 12:15. And what is your question? Your question is basically valid fair value gap. Look, brother, the run has started from here, right? It came above, retraced, it went higher, retraced, higher. So you can say the run has started from here, here to here. Like this is the thing. Where is your first fair value gap? I can see 11:30 is my first fair value gap. Then above 11:15, I mean 11:30, this is my second fair value gap. This is the last fair value gap to a upward run. When we see the upward run, we look for the lowest fair value gap. I marked it. I was thinking if I can use that one. Okay, if I can use that one, but that is not valid. I mean, it is not important for later use. For later use, this one is important. This one is important for the instant use. Taking sell side liquidity, market structure shift. First fair value gap is the breakaway gap. Second fair value gap is the entry. I mean, the entry, right? The second fair value gap, you have to take your entry. Above this fair value gap, this one, I don't care. This is the last candle. when you will see some kind of lower run from here to here, this is the lower run, you will expect the first parallel gap at the beginning of the run, upper run at the beginning of the run, the first parallel gap from the beginning. That should be important, not the last run, last parallel gap. Okay, brother. I hope I hope you got the point. Whatever I was trying to tell. Okay. I don't know how still you got the point or not. Now, what is my expectation? Am I going to take buy? No, man. I'm not going to take buy. Why? Why don't you want to take buy? So now I can reset my account, right? So this three thing I told you how, if you are greedy, then you will take a winning trade. Your winning trade will turn into a losing trade. When you will take a losing trade, you will force yourself to take another entry that will be your losing trade as well. And when you will take two losing trade by reading the price, the third one you will just take randomly. Market is going higher, I will take buy. Market is going lower, I will take sell. You will take another losing trade. And by three losing trade, you are already at the end of the limit, I mean the loss limit of your prop firm account if you are using any prop firm account. Okay. Now, if you read the whole price action, you can easily take this winning trade, then another winning trade, then another winning trade continuously. If you are not greedy, that would be your first winning trade, not the losing trade. Okay. So I'm going to reset the account. I don't need all of these things, and all of these things I would like to talk all of these things at the morning, but I'm in the New York morning time, but it wasn't actually good that time. Now, why, brother, why do you use this fair value gap till now? Why you are going to use that one? No, I'm not going to this one because this is already balanced. This fair value gap is already balanced. Then why you keep them? Because I didn't see it as balanced. That is why I kept it over there. I'm not always right. Sometimes I'm wrong. So if you are not going to use that one, which one you are going to use? Which fair value gap is important for me? Can anybody tell me? Just watch your chart and tell me which fair value gap is important for me right now and later. I mean, if price go more higher, then what time is exactly I will mark, and I will expect price will hold over there and it will go lower, because my narrative is telling me it will close inside the Friday range. That is my narrative, and it is telling me that it will go and close the Friday range. So I'm going to expect the lower run. Okay, not the higher run. Now it will go high. It can go high. I don't care about that, because whatever I needed, I got it from there. All my execution, I got it over there. Now where it will close, I don't care. I really don't care where it will close. Okay, but just tell me. I mean, write down the time which fair value gap I am just looking right now, and if it can break that fair value gap, which fair value gap I will look for later. I mean later time. Just write down that two time. I need to know that, because that's the thing I was talking about from the beginning of today's live streaming as well. I'm talking about that one for last 1 month. Please don't, it's touching the high of the new week opening gap. No, brother, that is not my question, Julian. My question, please give me my answer. Okay, right now, which fair value gap, what time exactly that fair value gap has created, I'm watching. I'm thinking that that fair value gap will hold the price and it will go lower. If it failed, then which fair value gap will I will expect later it will go over there, and that fair value gap will hold the price and send it back to the lower. So which is the fair value gap? uh, okay, 101. Anyone else? That is one question. I mean, that is the answer of my, that is the half answer of my question. You are all talking about this fair value gap. Absolutely. Right now I'm just seeing this fair value gap can hold the price or not. Okay, so this is the last fair value gap. I would like to say holding the price. What does it mean? Holding the price, what does it mean? It means nobody can close above this fair value gap. Nobody can close. If I see a body has closed, what I will expect? I will expect it will do this type of things. Just think, if there is a body that has closed above this fair value gap, then it will come back again to the lower part. I mean the consequent encroachment, something like this. Then it will come back again here, and it will go for the sell side liquidity if there is any clear buy side sales. I mean clear buy side liquidity if there is any. Okay, now what is the holding price? Nobody can close above this fair value gap. If this fair value gap failed to hold the price, what time the second fair value gap is, which I will look, that will hold the price. Okay, ICT 101. Yeah, that's the thing, brother. Thank you. Is the first one as breakaway gap. I need the time, Remedios. Oh, okay. You have already gave me the time. Sorry, brother. Yeah, 101. Thank you, brother. See the further fair value gap lower that is 101. All of you are actually giving me the half answer. I need the full answer. If this fair value gap failed to hold the price, then which fair value gap should hold the price? What time? 12:03. I would say the opening range gap, but you didn't mark the most important than the 101 minute. No, brother, no. Opening gap is not important anymore. Opening gap is important until it is traded. Until it is traded, opening gap is important. Okay, when it is traded, it is not no more importance. There is no more importance. Okay, but you can keep them on your chart. You can keep them, and if you get any kind of precision, then you can use them, but I don't use them if it is traded. Okay, so images 1203 ICT 1203 1202. Let's see actually. Yeah, 1202 1203 12, yeah, ICT 1203 Remedios, not 1202. I mean, look at this fair value gap. Yeah, I know there is a fair value gap, very fair value. Like there is a fair value gap. What I told about this type of fair value gap. See what I have done. I have made my chart like this, and then I can see this is a very clean fair value gap. But if I put it in normal way, just look it over here. Okay, if I put it in a normal way, you can't see this fair value gap. You can't see it, brother. So you have to look for some kind of this type of fair value gap. Okay, this type of, yeah, it is very small, too small. So you can't go for that type of fair value gap. You have to go for this type of fair value gap that is more obvious. I mean, you see that, do you need to, there is any hard work do you have to do to mark that fair value gap? I don't have. So actually that is the fair value gap I will see, and I will expect this one will hold the price. Okay, I will go to 15-minute chart, and I will see is there any 15-minute most obvious thing, or okay, something like that. Okay, how often do you use breaker? Very rare, brother, very rare. So in 15-minute chart there is nothing. Actually I am expecting it will reverse from there. That is my expectation. Let's see. Okay, let's see what it has done or what it can do. So I want to go 1-minute chart. Yeah, there is nothing important except this order block level. So it can retest the order block from here as well, as this is not refresh, I mean the prepared. Okay, so I will have two level over there, and the consequent encroachment, that will be the consequent encroachment of the what to say, the consequent encroachment of the order block, and this fair value gap are at the same level. But I really want to see market will reverse from there. Okay, let's see. It has taken the sell side liquidity, given you the market structure shift. There was first fair value gap that has been traded. I don't care about the buy, because my narrative is telling me market will go lower, so I'm not interested about buy. Oh, if market would go higher, it came here. Okay, just think it came here. Oh man, we have missed so many entries. I don't care. My narrative is telling me that market will go low. I am not, I don't care about the buy now. I will care about the low. Now, will I take my sell over there? No, I won't take my sell over there. I need to see first that this fair value gap is able to hold the price. When I will see that, then I will frame my trade. If I don't see that, I have nothing to do. I will just see where price can go. After this one, this is another level that can hold the price. Will I take my buy over there? I mean, the thing I talked about, like constant encroachment rejection, then upper level retested. Yeah, I will try to take a buy over there. If I see there is a very clean buy side liquidity, I can see this high and this high. They're relatively equal high, though it's very hard to mark them as a relatively equal highs, but it is relatively equal high, to be honest, brother. So why this high? Why not that high? Because I can see there is a candle, there is a candle, and it is 1 minute chart. Don't forget that, okay? So that is the reason. Now, if this candle go below the consequent encroachment, then I will think this is the fake breakout. This is the fake breakout, okay? Or if it can close inside this gap. Sometimes I get confused about the fake breakout. So I recommend you not to take decision depending on the fake breakout. Okay. Okay, understand. Thanks. No problem. The zero breaker, it's breaker. Where is breaker, brother? This one? Are you talking about this one? No, there is no breaker in my opinion. I mean, if you go for the perfect price action, perfect breaker, I don't see a breaker over there. I don't see. Okay, so it has closed. In my opinion, it is going higher. Will I take my buy over there? No, I won't take my buy over there because I need to get the rejection from the constant encroachment. It has to leave the area, then it will come back again to the upper level. Then I will be interested to take my buy. Until then, I'm not going to take any buys. Okay, because there is another level. This is the old fair, I mean, order block. It can be retested or this fair value gap that can hold the price because that is the last fair value gap. Still now there is a possibility that market will go over there and this fair value gap will hold the price before going higher because above this fair value gap there is no other fair value gap, nothing. Just above this fair value gap there is nothing that can hold the price. Okay, so still now I am not interested to take buy. That is the way you will read the price. Okay, only 3 minute has that 1203 fair value gap. uh, Only 3 minute has that 1203 fair value gap, but it's clear over here. In 1 minute, I mean in 1 minute it is clear fair value gap. Okay, I love to see that. It bounced up from the high of the new week opening gap. Yeah, I talked about that, brother. I talked about that some of you actually don't want to keep the new week opening gap, but I really love to keep them until it is traded. Okay, I mean at least 5 to 6 weeks. But if I see prices around that new week opening gap, if it takes 2 months, 3 months, 5 months to leave that new week opening gap area, I kept them because con consistently it actually reused. It's always reused. Okay? So let's see what price can do. Okay, still now so far we have seen that market actually break the fair value gap. The last fair value gap, it has been broken. We didn't get any kind of constant encroachment retracement, I mean rejection. Then the upper part, we didn't get that. Still now we have another fair value gap that is above, that is the last fair value gap, and it is actually trading this order block level. This is the old order block from the 50-minute set. Okay, so all of this level, I'll just remove that one. Let's see what price do. If it can break this one as well, then I'll be sure market is going higher. Until then I am expecting market will go lower. That is my expectation. I will work with my expectation. I'm not going against my expectation. Okay, dicks are going up, NQ is going up. Yeah, it happens sometimes, Pamsi. It happens. In that case we actually see some kind of uh, high resistance liquidity run, something like that. Okay, I love these exercises you give for us, so those who wants to learn can try to read in real time. Thanks a lot. No problem, brother. No problem. Thank you. Thank you. I'm here to give you the precision so that you can learn the price action, and I can go to your country. I can I can waste. I mean, I can, what to say. I mean, the I can use your money. Okay, I can use your money to visit, to eat, for travel to your country. Okay, I can do that. So that's why it is important. Okay, so right now it came to the consequent encroachment of this fair value gap. So if I see nobody can close below the consequent encroachment and price has been rejected from there, it come back again to the top, then I will be interested to take buy. Very next candle come to the up. I'm not interested. After the rejection, I need at least two candle after the rejection. Okay, then I will be interested to take some kind of buy. Until then, I am not interested. I am working with my psychology. So that's the thing. Okay, brother. Good evening. Good day, people. Good evening and good day, Bloto Loto. You are late. You are late, brother. You are late. 1110 fair value gap cannot hold the price either. 1110 fair value gap. Is that 1110? Why is 1110, brother? I mean, why 1110, brother? And this one has fully traded over here. Okay, this is not untraded fair value gap. Look, so how many candle over here? How many candle? This fair value gap, there is nothing left. To be honest, brother, it is totally balanced. This fair value gap is totally balanced. Okay, let me show you how it has been balanced. Okay, look, this is the fair value gap, right? What is this? Sell side imbalance, buy side inefficiency. I need a buy side. I got my buy side over there. Okay, now come, price came back again to the lower part, rejected from there, take the sell side liquidity, or from here, it has taken the sell side liquidity. So it is balanced. I don't need that one. A balanced fair value gap, I don't need that. Now I can see it has actually rejected from the consequent encroachment. It leave the space. Okay, if it can come back again to the lower part, upper part of this fair value gap, I'll be interested to take a buy. Now will you take a buy over there? It's up to you, brother. I don't know. If you take a buy, maybe you will take a loss. I mean, if you use your real money. Okay, why? Because this is the macro time. Don't forget the macro time. This is independent. It doesn't care about anything. It can easily take the buy side liquidity, can give you a market structure shift, then can give you a lower run, or it has already taken, maybe no, it didn't take the sell side liquidity yet, did it? Yeah, it has taken, no, it didn't take. So this is the macro time. You have to avoid the macro. Whatever your high time frame analysis, you have to avoid the macro. Trust me, brother. It will save you. If it was a normal time, I would take my buy over there. Okay, don't think I have taken this buy. I'm just telling, if it was a normal trade time, I would take my buy over there, and I would put my stop loss just below here, below this low. Okay, I mean below this, as there is no highest low, I should put it below this low, but I don't want to go so far. I will put it over here, and I will go for this extreme buy side liquidity. Never, I will go until the upper level of this fair value gap. That should be my entry for the normal time. Not if it is, or it is not if it wasn't the I mean the macro time, then I would take my entry like that way. Now if macro does, I mean macro will change this entry, I don't know, not every time, but sometimes actually macro change the high time frame analysis. Okay, it actually do its job. After that, market actually come back again, through its, what to say, the normal pace. Okay, something like that. Okay. How long do you just came? Okay, just Camaro, I think you got your question. Blotter, how long do you leave the new day opening gap on the chart for? Same as the new week opening gaps? No, for the new day opening gap, I told you, brother, you have to keep it for 1 week. After 1 week, if you see it price never come to this new day opening gap. Okay, when this new day opening gap has created, it never come back again to that new day opening gap. You have to keep them until price come back over there. If it takes 10 years, you have to keep them for 10 years. You have to do that. And if you see it has traded, maybe it has opened today and market has traded this gap, you can keep them for 1 week. After that, you can just remove them from your chart. You can do that. New week opening gap, I have already told you, right? Okay, I think you got the point. I understand. Yes, 0, thank you. It come to down. I think I'm learning a lot. Thank you, George. Thanks for that. I have learned weekly bias, daily bias, narrative levels where price can react. I have learned entry and finally emotion control psychology. Oh man, that is a great achieve. That is really a great achievement for you, brother. Happy for you, brother. Okay, so once it trades through the new day opening gap, you keep for 1 week. Yeah, if it is traded the new, I mean the new day opening gap, if it is traded, then I will keep it for 1 week. For new day opening gap, yeah, I will keep them for 1 week. New week opening gap, I don't know. At least I keep them for 5 weeks. At least 5 weeks, okay. But ICT told that you can keep them for 4 weeks. I mean 1 month. You can keep them for that. Then you can remove, okay. But I saw ICT actually kept them sometimes 7 to 8 months as well. I actually habituate to keep them for more time, okay. Give me sometimes. I need to. You're most welcome, Loto. I need to drink some water. I will just come back. In the meantime, just let the macro go, okay. So the macro time is until 15:10. Just let the macro go. We will see if we would take that entry, we would be the profitable trader. I mean, we would be profitable, or we are going to take a loss. If we take a loss, then we will go for mitigate our loss, okay. But it is what it is. Nobody please press your button. At least if you do that, you can learn this thing. Trust me, brother. I explain everything about here, about this fair value gap, how to utilize this fair value gap. Try to understand the thing, okay. That is important. Now if I see the big run, I will see the big run now. I want to see the big run right now. If there is a big run, I want to see that right now. Why? Because it has taken all the sell side liquidity. All of these candles has made the sell side liquidity. This candle has taken the sell side liquidity. Now if price would like to go higher, it should go higher now. I want to see the higher run right now, okay. So please just give me some time. I need to drink some water, and if I am stopped out, I'll be happy to be stopped out, okay. I'm just coming back. Anybody is here? Anybody is here? Anybody? Nobody is here. I took a loss. So what? Let's see the precise price action now. How it works. Why it is going higher now? It shouldn't go higher. It should go lower. It is going higher. What I told you. When it will come back again to the lower part, you have to put your stop loss below this level. That should be your entry. Why? Why, brother? There is also a reason. I told you, brother. There was another reason, and that was the macro time. It should work, but because of the macro, it can break some rules. It can do that, but after the macro, it should work like the way it has to work. If you want to put your target profit over there, you can do that. I don't like that one. I'll go over there. I want to see how much I took a loss. 700? Seriously? Is my look over here? Is my loss has been mitigated? Yeah, my loss has been mitigated. Brother, just it has to come to the consequent encroachment, not the body. Okay, the rule is body can't close below the consequent encroachment. Body can't close. Okay, that is the rule. We can come here, we can come over here, but body it has to close over there. If you ask about here why it has come over there, why it has come over there, because that was the macro time. We didn't had any macro entry over there. I don't see any macro over there, but thing is when it will retest from there, it will come back again to the top of the fair value gap. You will take your entry, you will put your stop loss below the lowest low. This is the lowest low, there is no other low above that low. Why did I put it over there? If any of you take that entry, you will be stopped out. Though I mean mistakenly I told that I am going to put my stop loss because of this that things, but the thing is you have to put it below over there. I'm not going to put my stop loss at the place where it should put it. Here also I didn't put at the exact place where I should put my stop loss. It can be traded that area again. One more time, it can do that. So if you would like to take your entry, you are going to be messed up, okay? Because you don't know how long it can go, and you will be chopped up. Okay, so it's up to you. If you would like to place your stop loss, I mean place your entry to your account, real account, you are going to take a loss. I will never do that in front of you. Okay, at the level where you should put the stop loss, I'm not going to do that. Never ever. For that, okay, blood lotto, yeah, but does it have to get to CE, or can it come like that? No, it has to come to the CE. It has to come over there. If it can't come to the CE, then this whole thing is not valid. This is not valid. If it failed to come to the consequent encroachment, okay, then it is I mean this entry is not valid. The zero, yeah, 100%. Thank you, brother. So I am just going to remove that one because of the thing is I know there is okay. This time I want to see it will go through this. I want to see that. What is my narrative telling me? My narrative is telling me market will go lower. Why I am going to take that entry? I'm going to take that entry. It's because I want to see it will trade this fair value gap, as this fair value gap failed to hold the price. Okay, that is why I want to see market will trade at least this fair value gap. Now, if I would take that entry, I would have already taken some partial above this size. Above this highs, when price went over there, I would take some partial. You will see that whenever I take an entry and I upload that to my Twitter, you will always see I take some kind of partial. If there is no exact level, I use Fibonacci, or I use some random partial, something like that. Okay, and where the price, I mean the stop loss should be placed, I will tell you later. If I am stopped out, then I will tell you. If I don't stop out, then also I will tell you where your stop loss should be placed. Okay, don't think you have to put your stop loss below this loss. Okay, don't think like that way. Brother, you are very clever, you put your stop loss over there, so I'm going to put it over here, so I won't be stop loss. Don't like that way, don't think like that. Okay, because that is not the exact level where you can put your stop loss. So it is what it is. Okay, Lot. Okay, thanks, no problem, brother. Beautiful, thank you, brother, thank you. So you can see market precision is something that should work at the time. Now if you would like to read the price right now, what has price told you? This fair value gap has broken over here, it come back again, failed, take, I mean break this fair value gap. Look where every body has closed inside this fair value gap, it failed to break this fair value gap. What does it mean? It means price is telling you, brother, if you would like to take a short, you are going to chop up. So please don't take short. I'm going higher. How long you will go, brother? Tell me how long you will go. No, mark it by yourself. Do you have any other level that is very important? You can mark them. I can go over there. Don't believe that. I can break that one as well. I can do that. I am fully, what to say. I'm very strong. I go by my own choice. I don't listen anybody. Market is telling me, okay? And this is not the thing I'm telling you. Market is actually telling me I am, and I'm independent. Okay, I'm not going to listen to you. I know where I should go. I will go over there. Don't worry. Now, this is the fact, brother. If you would like to read the price action, most of the time you will be the winner. Yeah, you will take loss. To be honest, brother, you will take loss, but you will be the winner most of the time. Most of the time. I will put my stop loss over there. Why should I put my stop loss right now? Anybody can tell me where should I put my stop loss? I mean, you have to tell me the price level. Okay, over here, just go to your chart and tell me the price level. Why should I put my stop loss? Depending all the execution I have done before. So just tell me where should I put the stop loss. Excuse me. I'm not going to put my stop loss at the level where it should put. It's up to you. If you want to press your button to your live money, you can do that. I'm doing paper trades, so if I get stopped out, I don't care. It is not real money. But if you press your button to your real money, you are going to take a loss. Maybe. I don't know. Anybody please can tell me the price where I should put my stop loss. Depending on my previous videos, all the videos I have uploaded. Depending on them, okay? Let me know where I should put my stop loss. What is the perfect level that can be broken? 15,200 05 15,200 05 05. Let me 05. No, I'm see, not that level, brother. It can be traded. Easily it can trade over there. The reason is, you see this low and this low, they are relatively equal low. Market easily can go below that lows and take the sell side liquidity from there. That is not the exact level where you can put your stop loss, in my opinion. Okay, at the CE level, little below. No, Remises, no, 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 brother, not CE level. I mean, C level is the level where market can easily go because we have the sell side liquidity. Okay, 1575. No, brother, no. Let me show you. If I take my stop loss, I mean, if I would like to take this entry over here, maybe just here. Okay, I will put my stop loss below this C. I'll give little space, very little space. I'll go for there because if market would like to go lower, if it would like to take all the sell side liquidity from there, it can come to the lower part of this parabolic gap. It can come, but it shouldn't break this constant encroachment of this week because this is the last week. It has traded this parabolic gap already. It should not break this constant encroachment. This is the last parabolic gap. It should not break that. If it has broken, I am stopped out. If it is broken, then I am stopped out. I will be happy to be stopped out. I really don't want to say it will break the constant encroachment of this week. It should be above this constant encroachment. This is the level where I'm thinking that market can stop. Okay, so this is my level. Now let's see if it can, I mean, it can hold or not. I'm right, not every time, brother. Sometimes I'm wrong, to be honest. As my narrative is telling me market will go lower, but I'm expecting price will go higher to trade this parallel gap first. After that, it can come lower. It can do that. I think you guys got the logic. What is the logic? Whenever you will see some kind of sell side liquidity, very little sell side liquidity, you have to be careful. And this parallel gap, this is the last parallel gap that is actually holding the price for the lower run, for the upper run. So you have to understand that price can trade this area all the time. All the time it can do that. I told you, if you see it has been rejected from the constant encroachment, later if it can come over there, you have to put your stop loss below the lowest low. Why? Because if there is any lows at the level of the constant encroachment that has the sell side liquidity, market can easily take that sell side liquidity. Easily it can take that, but it will never break the lowest low. It can break that lowest low. Now when it has come over here, it come back again to the constant encroachment after the macro. Okay, after the macro it came over here, it has been rejected, it come back again to the top level. Okay, just think it has come over here, just think like that way. Here, just think, so it has come back again to the top level. So now where is your lowest low? This is your lowest low. It can break that low, but it can easily take this low. It can easily take this low. It can easily trade over there. It can do that, but it shouldn't break this low. And where I have put in the constant encroachment below the constant encroachment, because most of the time I saw market actually take the sell side liquidity from there, but it never goes to the constant encroachment. That is my observation, and I actually stay still on my observation. And you can rough not listening to dollar index. So okay, let me see that your dollar index. What is it being? Hourly chart. So it is actually going higher to the breakaway gap. It should retrace. I mean, it should go lower. It should go lower now. It has traded the constant encroachment, and clearly it has told us that market will go lower because it's broken. So it should go lower now. Thank you. NQ should go little higher. It should go little bit higher. Let me go to the 50. So from 15-minute chart we can see nothing important. I mean, it should go to the high because it has broken the order block level. It has broken this order block. It didn't reach the consequent encroachment. I think so. Let me check actually. No, it has reached to the consequent encroachment. Overall, let's see what it has done. I'm expecting little higher run, but if I'm wrong, I'm wrong. I'll be wrong. No problem. Let's see. Okay. There is nothing to do except waiting what price can do. And also I would like to see where price is right now. Price is over here. So this is the Friday high and the Friday range is here. So it is still inside the Friday range, right? If it is still inside the Friday range, it can easily go a little bit higher. It can go over there. There's nothing wrong. If it's still it can come over here to that buy side liquidity, it will be still inside the Friday range. I will think okay. Still now I am not okay. Okay. Still I am not stopped out. How funny it is. Still not I'm not stopped out. I should be stopped out. Let's see. I want some kind of big run now. Very big run. We are inside a macro. We are inside the macro, brother. Trust me. We should expect some kind of big run. Either lower or higher. Come down. Still now I'm not stopped out, brother. You can see that. Till now I'm okay. If I would take that entry, still now I'm okay. I really expect some kind of very big run right now. Oh my goodness. Yeah, something like that. I want to say this one will be broken, not the fake breakout. Broken. I want to see that. Not this type of Mickey Mouse move. I want big run. Give me the big run, brother. Listen to me. My friends are thinking that you don't listen to me. Please don't disappoint me. Please give me my run. I want it. I want it. I want it. I don't need your perfection, brother. I want to see that you will break this fair value, very little fair value. I want to see that. Don't make me disappointed. Don't make me disappointed. A red line? Zero, what does it mean, brother? Red line? Yeah, I told you that it can come to the consequent encroachment. It can come over there. Either in his run. Yeah, please, bro, tell him to give me the my run. It should respect me. I am the market maker. It should respect me. Why it is not listening to me? No. Body close, body close. I want body close. I want perfection, brother. I want the perfection. More big, more big. Not this type of Mickey Mouse move. See, it's not listening to me. I should beat him. I should beat. No, I shouldn't beat him. It started listening to me. Yes, okay. Don't calm down. Oh man, he's very naughty. If I would inside this trade, I would put my stop loss over here right now. If I would, okay, just let me put it over here and let this. just I will write it down first person. Okay, something like that. So that should be my stop loss right now. If I would take this entry, because this very big volatility, I don't want to be take a very big loss. I want to take a very small loss, very small loss. I want to take that. I don't want to see that it will come back again to the consequent encroachment. This time I am not expecting that it will come back again to the consequent encroachment. I really don't want to see that. I want to see that it will go through this level gap. That is my expectation right now. Okay, George, we will meet later, brother. I will just try to see where it will end and then I will close the session. So there is nothing important right now. You can leave, brother. Very nice, very nice. You have traded this order block. Very nice. Happy. But don't go to the consequent enforcement. Please don't go. If you go over there, I'll be wrong. If you even touch the consequent enforcement, I'll be wrong. I'll beat you. Even you touch the consequent enforcement one time, I'm wrong. See you, brother. See you. No problem, George. Thanks for joining and hope you got something from here. Just you don't think that you have just successfully wasted your time, okay? So I am expecting it will go higher and it will take the buy side liquidity or wherever. I mean, there was no buy side liquidity, but I'm expecting it will trade to this fair value gap. Okay. I didn't want to see it will come to the consequent encroachment. If it can come to the consequent encroachment, I would be wrong. I would close my trade. If I was in my live trade, I would close my trade. If it can come to the consequent encroachment. Now, if you ask me why, brother, the reason is you see it has done its job to the consequent encroachment so many times. It has done its job and it leave the area again. It come back again to the top. Yeah, it came little bit lower to trade the order block. If I mark the consequent encroachment of this order block, I mean the mean threshold of this order block over here, it is below the consequent encroachment. The mean threshold is below the consequent encroachment. Now, if this consequent encroachment is broken, there is no chance market will go higher because it has been rejected from this fair value gap. You see, when it was actually coming lower, it has been rejected from this fair value gap. That is actually that is kind of sign that market would like to go lower because it has been rejected from this fair value gap and now it has came to the consequent encroachment. That is why I told you, if even if it touch the consequent encroachment, I am wrong. I'm gonna kill my trade. I don't want to keep it. Now I wanted to see that it will be broken. So successfully it has been broken over there. I want to see it will go above this high now. When it will come above this high, I will move my stop loss. Before that, I won't move my stop loss until it is broken. And you know, all of you know what does it mean. Broken means I want to see a body will close above this high. I want to see that. If it can do that, I will move my stop loss. Until then, there is no way to move my stop loss. I will take a loss. Okay, I will take a loss. I'll be happy to take a loss. Okay. This is very difficult to trade last hour in Monday. It's very easy to trade last hour in Friday. Always remember, brother. Not only in Monday, but also Tuesday, Wednesday, Thursday. Very difficult to trade in Monday. At the last hour. So keep it in your mind. Let's see this consequent encroachment can hold the price or not. Now, I'm not looking at this fair value gap anymore. Okay, that is not important anymore. Now this consequent, can I remove this one? Because all of you will know if I am right or not. Now this consequent encroachment is much more important than any other level over here. Because this is the last fair value gap. It should hold the price. You see the consequent encroachment of this week? That is the last fair value gap that should hold the price. This is the important level. Yeah, it could come little bit lower to retest order block. It could do that, but this fair value gap should hold the price. If it fails, then it is also going to boom. Okay, you guys are getting bored. I know. I'm going to close. Let me see actually where it would like to go. It didn't touch the water block yet. It would touch the water block. That would be much more easier for me to read the price because it is retested the water block. It has already told me that it's going to, it is going higher. It has already told me that. Okay, okay, okay. Still now this last or fair value gap has hold the price. Is still now not broken, and it has retested the order block. I'm happy. Till now I'm happy. Mark this as a consequence. See how difficult it is in the last hour. Why it is so difficult? It is just every time you will read the price, you have to give the price so many space. That is why I put my stop loss over there. Don't think this is first partial. This is actually the stop loss. That is the reason I put my stop loss over there. I didn't bring it up. I will bring it up when this high will be broken. If it can broke that high, I will move my stop loss. Otherwise, I'll be stopped out over here. I'll be happy to be stopped out over there. This is logical, and this is the rule based stop loss, trial stop loss. So I don't follow the rules. Every time I get a stop out because of my uh, faster stop, moving stop loss. Okay, this is not good. This is not good. I don't want to be stopped out. Let me actually mark the consequence. Mean threshold of this order block. I really didn't want to see that it has been traded the the mean threshold of this water block. I really didn't want to see. That is out of my expectation. Sometimes you will see when I have uploaded a video, I told that not good. So this is the level where I am not happy to see this. Still now this consequent encroachment hold the price, but it has traded the mean threshold. That is not good. I really don't want to see this. Really didn't want to see this. If I come it over here, it has traded the consequent encroachment of this fair value gap as well. That is the thing I really don't like to see. That makes the possibilities lower. Still now I believe it will trade over there. Still now I am believing it as this consequent encroachment has hold the price. Order block retest came to the main threshold. This is the time. If it can go, it will go. Otherwise, if it is never, I will just move my stop loss right now. I don't want to take more risk. I will come over here below this low. Okay, this fair value gap low. I'll put it over there. If I am stopped out, I'll be happy. I don't want to take risk anymore that it will come back again to the main threshold or something. I really don't want to see that. This is the exact slopiness. See, this is the exact slopiness. In the morning, there was no slopiness. Why price is sloping? The thing is, narrative is telling us market will go lower, but this parallel gap is forcing price to go higher. This only parallel gap, it is forcing the whole price to go higher. Okay, all of this thing actually making this slopiness, and it is very difficult to trade, brother. Always remember, except Friday, every day's last hour is very difficult to do it. The price. Now new people will think I have taken so many losses. I have to reset this one. If there is anyone new, okay. Is there anyone who is new? I mean, this is their first time. Okay, so I am stopped. I'll be happy to be stopped out. Is there anyone who is actually new? I mean, this is your first day my streaming. Let's see. Actually, I would like to wait 15 more minutes. Okay. Yes. You see, that is why I have put my stop loss. When I have, I trialed my stop loss when I saw this candle has traded this consequent cosmic. After that, I trialed my stop loss because this is the signal that my bias is weak. I can be stopped out. That is why I put my stop loss over there, and if I am stopped out, how much I will take the loss? Near about two handle, only two handle. Okay, so it is under. I mean, it is acceptable, and you see, it failed to take that low. It failed. Still now it failed. So where was your first entry? If you take your first entry over there, if you would take your first entry over there, your stop loss would be here, your target profit would be here. Okay, still now you are in here, you are not stopped out. Look over here, still now you are not stopped out. Do you guys understand the logic why I told you to put the stop loss below the lowest low? Before this low, look at this low. If you remember, before this low, this is the low. There is no other low over here, no other low. You have to put your stop loss over there. Now how many handle? 11 handle. It is acceptable, it's not too much. Still now you are not stopped out. And when you can put your stop loss above, only when it will take the partial, you will take your partial above that height. After that you are eligible to take your, to trial your stop loss. In the meantime, if you take some partial above that high, above that equal highs over here, then you will be stopped out. You will put your stop loss above there if you think like that way, and you will be stopped out. It's up to you, brother, the way you will think. What a price action, man. What a price action. I love it. Love it. And if you remember, in Saturday, I told you about the psychology, trading psychology. If you take a winning trade over here, anywhere you have taken a winning trade, don't come back again to the market. Depending on the same logic you are using the winning trade, don't come back over here. You can be chopped up. You can lose the winning money you have already win. You can lose them. See, this is the same logic. It worked so many times over here, so many times over here, here from here. It worked so many times. But this time, yeah, if you take the first entry and if you don't move your stop loss, if I were you, I would already, I took some partial over there. I'm stopped out to the break even. I'm already stopped out, to be honest, brother. Any of you, just you take your entry, you put your stop loss at the level where you should put, you try, you put your profit target profit over there, maybe here, then you are not stopped out, but I don't have that much patience to see all of this sloppiness. I really love to take partial, put my stop loss at the break even. I'm stopped out, okay, I'm happy. If I take I entry over there, that is more obvious. I will never take another entry in any other place. I will never do that. Got you guys. Do you get it, brother? Hey, Julian, to see you, brother. So many boring lecture. Don't worry, I am just waiting to finish this thing. I really want to see that I'm wrong. I really want to see that it doesn't trade this level gap. If it happens, then I will think I'm wrong. Until now, I'm not wrong. I know how price is trading over there. I told you from the beginning, but I really want to see that I'm wrong. Price failed to come over here. This fair value gap concept has failed job. I really want to see that. So give me 13 more minutes, then I will just end my session. Let's see where price can go, where it will stay. Julian, you are still here, brother. You write down by. I mean, Julie, you still here, right? You told by so many ago. I mean, so many times ago, so much time ago. But you are still here. Why you are here, brother? To see that I am a loser? Oh man, I will be upset then. If guys don't listen to me, I will be upset. Thing is, if you are in a trade, you have to understand when price is just against you, you have to take partial. You have to get out from that trade. If you ever, you will see sometimes I get stopped out at the break even. I take some partial, I get stopped out at the break even. Why I do that? The thing is, I really don't want to be chopped out. That is the reason. Okay. Children, are you angry, brother? Why you are talking like that? Oh, I see you are still here, brother. Okay, then you all will be my proof that I am wrong here. Let's see. Let's see. Let's see. Let's see. I really love to be wrong in front of all of you guys. But till now, Price is telling me that I am not going to be wrong. Till now, brother, trust me. Till now, it is telling me, brother, you are not going to be wrong. I am gonna give you the winning medal. It is telling me, to be honest, brother, trust me. Let's see. Dun, da, da. It has been, I mean, Price has been rejected from this fair value gap. How strong this fair value gap is. Oh man. But it has already told me that I am going to be broken. It has already told me that. Look at this fair value gap. Nobody has closed below this fair value gap. Nobody. That is a very strong sign that market will go higher. Very strong sign. Why it has come lower? I am thinking this is the bullish flag. I mean the bull flag. So it actually came lower to take all the sell side liquidity from here. Now it will go higher. That is my thinking about the retail trader. Okay, all the retail trader they are thinking it is a bull flag. So it actually came lower, make them full. Now it will go higher. That is my expectation. But I really want to be, I mean, the loser this time. I want to see that I'm wrong. I don't want to see that I'm right always. Sometimes I should have wrong. Okay. Singing out, guys. Be safe. Yep. I'm here as well, but wanna see high price. Oh no, man. No, don't say that. Hands, don't say that, brother. We should be wrong sometimes, right? Because there are some other retail traders as well. They should be the winners. Sometimes, at least we should give them some scope, and for that we have to be the loser. Still now, I'm not thinking that I'm gonna build this. I don't know why. I don't know why. Don't go up, please. This is a pure consolidation. Bro, ICT is enough. Yep, it is obviously enough, brother. Why it is telling me that I'm going high. I need a one single will close above that fair value gap. Just one single candle will close above that fair value gap before 4. I mean, exactly 4, before 4. I want to see that. The time, brother, this is the time. If you miss this time, you can never do that. I believe that. You miss this time, you can never do that. Pure consolidation. Limit fair value is holding the higher end. This is holding the lower on the top. Yeah, this is pure consolidation. This is the pure consolidation, the bull flag, but the bull flag lower run has done its job over here. So this candle has taken all the bicep sell side liquidity. I need a higher run to make this bull flag as a wrong bull flag. Okay, I mean whoever take buys, they are already stopped out. Whoever takes, whoever sold from here, they are still in profit. I want to see them, they are also stopped out. That is my expectation. Let's see let's see what it can do. We are very near, we are 6 minutes left before taking the buy side liquidity. We are very near to the, I mean we are at the edge of the session. I want to see that it will go above and take all the buy side liquidity. Whoever sold over there, they will be stopped out. I'll be right. I don't know. I don't know. I really don't want to say that I'm right. I'm always right. You see how beautiful this bull flag is? So beautiful bull flag. I came here, started to consolidate, and this is the bull flag. I really wanted to see this candle. So I mean, 2 to 3 minutes before, because if I saw that candle before 2 to 3 minutes, it has already taken the buy side liquidity. Already it has taken the buy side liquidity. But it actually came over here at 354. Now it is going to take the buy side liquidity. It has taken the buy side liquidity. Already it has taken the buy side liquidity. Look over here. If it has more energy, it will take the, oh man, oh man, oh man. So it's my favorite. I always love to write it down. Why I'm always right? I shouldn't be right. I'm always right. You were wondering about my thought? Okay, look over here. This was the fair value gap. Okay, look all the bodies over here, all the bodies. Is there a single body which has closed below this fair value gap? No. But this is also a last fair value gap that was holding the price. Look over here, this was a fake breakout. I believe it. Okay, it's fake breakout. What about here? Is it also a fake breakout? No, it is not fake breakout. Then what about here? It is a fake breakout? No, it's not fake breakout. What I told you, fake breakout can happen one time. Very rare you will see uh, 2 or 3 times fake breakout. Very rare. I mean 0.0005% time. So it was exactly telling us I'm going to up. I am just gonna up. I'm not going down because look at this fair value gap. All of this fair value gap. What is the rule from the beginning? Now come from the beginning. Okay, let's read from the beginning, because otherwise you guys will actually get confused because of my execution. When this has broken, right? It has been broken. Price came back again to the constant encroachment. What do I need? I need the rejection. I got the rejection, right? Now when I got the rejection, when it will come back again to the top, I will take my buy. Will I? No, I won't, because that is actually what to say, macro time. Now if it is not macro time, if it is not macro time, just think this is not macro time. This candle, it came, I am already in the market. I am already in the market. Just let me put it. I have just taken my entry over there. Where should I put my stop loss? Here. Just watch my live streaming from beginning. From beginning, today's beginning, what I told over there. You have to put your stop loss below the lowest low. This is the lowest low. If you have any confusion, just watch the video from the beginning. This is your lowest low. Where is your buy side liquidity? That is your extreme buy side liquidity. That is your extreme buy side liquidity. Okay, there is no other buy side liquidity. But below that buy side liquidity, there is a last fair value gap. That means if price would like to hold, this fair value gap can hold the price. So I am not going to take a risk over there. I will put my stop loss to the top of this fair value gap. So I will put my stop loss over there. I mean the take target profit over there. I am already in the market. Now all of this consolidation, if you hold your price, I mean trade, boom. If you hold your trade, boom. If you don't hold, if I were you, I would take my partial over there. I would be stopped out at the break even. To be honest, but that is true. I'm not gonna tell you lie, but look where price go went to the buy side liquidity. I love that. All of this precision. Whenever I saw that, this is the thing. I was very hurry to stop. I mean to get break even stopped out. Okay. I really don't want to spend my time to this consolidation, because I have more perfect price action before. So many clear price action over here. Why I will be chopped up over here? Why my pressure will go high? I don't need to do that. I really don't need to do that. So that is the thing, and it has actually above there. It came here. Okay, I love that. I love that. So guys, do you think and do you understand when you will see? Just think, you have already entered over there, you have targeted over there, your stop loss is over here, and you are now not going to take a partial. Like everybody is actually doesn't like to take partial. I know you don't like to take partial. You have to read the price. What is the reading price action? You have to read every candle. What is it telling you? Can it break this low? I mean break this fair value gap, as it is consolidation. If it is not consolidation, you will already got your rejection from there. Market should come here, boom. You will see, boom. But as it is consolidating over there, you have to read the price step by step, step by step, step by step. At the last, boom. I love that. I'm always right. I know you have the fair value gap as a strong area. Okay, so I think you got your answer, Rahul. and give us a big Hans. Tell something, brother. Tell something. I want to listen something from you, Hans. Answer global, bro. What is I fair value gap? I fair value gap. What is I fair value gap, brother? What is I fair value gap? This has actually worked as I fair value gap, inversion fair value gap. Okay, so this fair value gap means it should hold the price and send it back to the sell side. But instead of that, it price went through this fair value gap and made that as a supportive fair value gap. So this fair value gap turns into inversion fair value gap. Okay, brother. So that is the I fair value gap. Hans, are you there? Please write down something, brother. I want to see your comment because you are the one who is going to be the profitable trader very soon. I believe that if you keep continuously doing this, whatever you are doing, that is my belief. To be honest, I told you your name one more sometimes ago. I repeated your name again. Okay, thank you, Hans. Thank you, brother. So I think Hans is not over here. Then Hans Tino Vilvila, sorry Villalva, he is not over here. Oh, Remedios, have to go. I'll go to brother. Don't worry. I've just done. I was waiting for this run, to be honest, brother, and I have all done the run. Anybody has any question? If you have any question, just let me know. Otherwise, I'll just close my trade. I mean, live stream for today. Thanks, but I need to learn more. Yeah, I know. You need to learn a lot, brother. A lot. This is just beginning. Trust me, brother. This is just beginning. You are just learning the fair value gap. Okay. So anybody has any question? Please let me know. Otherwise, I'm just gonna close today's session. No, I'm here only. Okay, Agarwal. You will be here. I know that. Try to understand the concept I'm trying to give you, and don't run faster than me. Just try to walk with me. To do that, you will learn too. Okay. Just let me know. Go to know. Have a great night and thanks. You are most welcome. Thank you, brother. And I'm gonna tweet something. You have to board over there. Okay. I need to do that. Good night, bro. Bro, report. Good night, brother. I'm just gonna be well. Thank you, brother. Thank you, bro. I'm just gonna tweet something. Please don't. I mean, don't please just avoid that. Okay. Get session for live play section. Thank you. You are most welcome, Amsi. You're most welcome. So no more question. Okay, thank you. See you guys. Good night. Have a nice day. Bye bye.